So many of the listed construction companies in South Africa have been underperforming when compared to the all-share index. And this underperformance can be described by a number of factors. Firstly, the perception of these companies were hard hit in 2013 when the Competition Commission unveiled the anti-competitive collusion that was happening from projects from 2006 through to 2011, for which they were fined a combined 1.6 billion rand. The other factor that we've seen is, of course, delays from the government to implement various infrastructural rollout projects, including the infrastructural plan, as well as other emerging economies facing volatility, which has caused delays in projects such as mining and other state-owned projects. And we see companies consolidate and merge when we have underperformance, which is the state of the construction market at the moment within South Africa. If growth rates are low, companies need to steal market share from each other in order to continue to deliver value to shareholders. They can only do this by growing at a steady pace, which is something that South African companies are currently Frost Sullivan tracks the investment in infrastructure on the African continent, and we know that there's a lot of requirements in terms of water, energy, power and transportation infrastructure that's necessary over the next couple of years. Now, the sub-Saharan African construction market is characterized by a lot of these muted infrastructural investment projects, which is essentially what everyone is after. So a merger within the construction market would essentially lead to increased competitiveness. So the positives of a merger for a company would be things such as an increased footprint on the African continent, a stronger balance sheet to weather the storm. We've also seen construction companies gaining skills to be able to deliver on more niche projects, such as delivering turnkey products within the infrastructural energy and power sector, as well as just gaining a bigger footprint in the African market. So overall, a merger would definitely benefit a construction company within South Africa. On the flip side, of course, it could have negative impacts on the market as a whole because of the competitive factor that would be negatively impacted in the market. And any merger or acquisition within the construction market would, of course, need to be approved by the Competition Commission. And such an outcome would be interesting to see following the anti-competitive behavior that we've seen and the fine from the Competition Commission in 2013.